bear. So here's what I want us to understand. And I brought this up so we can see this. This is important for us to see. These are the major crashes that happen in the market. And here's the patterns that took place. 2007, 2000, 1973, and here we are in 2020. When we look at the spot that's blue, where I got the blue circle at, that was pandemic. That was pandemic. And what I've learned is that there's always this deep, deep point in a recession that's pivotal. It's real pivotal. In the 2000 recession, there was a point that what happens is there's a point where the market tries to test something different. If we notice about this 2022 one, it never got as deep as these other ones. It never got as deep as them. It never got as drastic as they got. It actually is moving completely different than them. So what I want us to understand is that everyone is different. Everyone is different. But there's always going to be a similarity in it. And there's always this, what I like to call inflection point of every one of them. So I wanted us to see that. The rhythm of the bear, they all dance to a different tune. All right, let's go a little further, man. All right, so here's what I was talking about earlier. The S&P is up right at 14% this year, but most stocks are still down. Despite the overall positive return in the market, the median stock is down 0.2%. More stocks in the index are down than up. So here's what I want to understand too. There's only a few companies that's up. There's only majority of the market is from 0 to down of the S&P. You feel me? Majority of the market is down. You have a few select of that's in between that up by 1%, up by 20%, and then there's very few. Now remember, the top 10 stocks represent 30% of the S&P 500. That's big. So that means if that represents 30%, you still got 40% of the market that's down. So you got another 30% of the market that's averaging 0.8 or something like that. Hey, let's stop right quick, man. We got a new high, y'all. 3,800, man. Can we hit 4,000? Can we hit 4,000? Can we hit 4,000? Man, I love y'all. I love y'all. I love y'all for sharing it. All right, so here's what I want us to understand. So listen, y'all. That's why I told y'all tonight's going to be real game. So listen. This is why I'm telling y'all I don't want us to get so caught up in saying, yo, we in a bear market, we in a bear market, we in a bull market. Don't get so caught up on the TV saying we in a bull market. Understand that we are talking about what's calling a rolling recession. Of course, Apple, you're going to get the big companies are going to hit all-time highs. You know why the big companies going to hit all-time highs? Because watch this, y'all. Here's important. This is important. The reason why the big companies are going to hit all-time high is because of this. The actual institutions, the whales, they're only going to find safety in certain companies. They can pile up in the Apples. They can pile up in the Nvidias. They can pile up in the Facebooks. They can pile up in the Alphabet. They can pile up in certain companies. The reason why they can pile up in certain companies is because how big the market cap is. That's safety. They're going to pile up where the safety is. So here's the bad part about that. We are going to follow the big investors. And when we follow the big investors to their safety, when they pull, we get stuck holding that bag. You feel me? We get stuck holding that bag. Now, I don't want us to feel bad like because we in quality companies, we okay. But the other 40% of the market is not doing well. And then you have another 30% that's just straddling the fence. That's the one in the middle where I got the dotted lines at. They straddling the fence. They going between good and man, all right. And so I want us to just understand that. So when we hear all-time highs for certain companies, I want us to understand that's where the big boys, they still want to try to make money. All right, let's go a little further, man.
What's good, trappers, man? It's your boy, the Wall Street Trapper. Right now, I want to invite you to an amazing experience full of value. That is my community, Trappers Anonymous. It's 100% the greatest fundamental investing community on the market. Listen, your portfolio should be a masterpiece. And the only way we get you there is if we help you to learn how to invest with confidence. Now listen, I get it. Like you don't know a lot about stocks, or maybe you've heard people say how much money they lost in stocks, but I can guarantee you, one, because they weren't in the community, and two, they lack the information. Our goal in Trappers Anonymous is to help you, really to hold your hand on the journey to becoming a confident investor, learning how to navigate through the different events that the stock market goes through to take you from panic to encouragement. There's no better time than now. This is an opportunity only for those who are willing to be on the journey. So listen, man, click the link below. Come join me in Trappers Anonymous, man. I will see you in one of our many classes, whether it's Moat Monday, whether it's the 2-hour class we do on Sunday, or whether it's just a book club. Everything is geared toward making you a better investor so you can triple your net worth and turn your last name to an asset. It's your boy, Wall Street Trapper. See you in the trap.
All right, so I wanted to go a little further. Let's put this one in their face right now. I want them to see this right now. Let's put it in their face right now. Big screen, big screen, big screen. Watch this. I want y'all to understand this. Over the since 2008, here is a breakdown of how the market has operated. Right? Here's how the market has operated. And we're breaking it down by segment. So if we can see in 2022, cash return 1.6%, a high yield, I want you to go to 2022, a high yield bond had negative 11%, a high grade bond, negative 13%, international stocks, minus 14%, asset allocated portfolio, negative 16%, large cap stocks, negative 18%, emerging markets, negative 19%, small caps, negative 20%, REITs, negative 25%. This was in 2022. So majority of the market, people had money on the sideline. But let's go to 2020, small cap. Right? Small cap gave us what? 20% gain. Emerging markets gave us what? 18% gain. Large caps gave us 18% gain. Asset allocation gave us 9% gain. International stocks gave us 9% gain. High yield bonds gave us 7%. High grade bond gave us 6%. Cash wasn't good. REITs wasn't good. If you look at this, if you snapshot it, every year gave us something different from 2008 to 2022. I want us to understand how the market is moving right now. You feel me? I want us to understand how the market is moving and how the market is navigating. I want us to understand that. I like to give us a bigger picture of what's going on. And so when we look at annual return on a large cap, 8%, annual return on a small cap, 7%, annual return on, just on average, 2.2%. Emerging stocks give us less than 1%. REITs on average probably give us about 6%. High yield, high grade bonds usually give us about 2.57%. High yield bonds usually give us about 6%. Cash and treasury bills of 3 months usually give us about 6%. Asset allocation portfolios usually give us about 4%. But let's go a little further. I want you to see this. Boom. The best return of all time. I want y'all to understand what we're doing right here. I want you to understand this. This is so crucial. This is so clutch. I want you to understand this. It's important that we I wanted to make sure we understood this right here. Like I told y'all, this game, I told y'all tonight we're going to leave equipped. All right, so watch this. Best year, large cap stocks, 32%. Small cap stocks, 38%. On its best year, small cap stocks gave us 38%. Watch this. International stocks on its best year gave us 32%. On its best year, emerging markets gave us 79%. On its best year, REITs gave us 41%. On its best year, high yield bonds gave us 8.7%. On its best year, high yield bonds gave us 57%. On its best year, cash only gave us 1.67%. Asset allocation bonds gave us 24% on its best year. Here's what I want us to understand. If we looking at this, we understand that our worst investment on its best year is going to be holding cash. On its best year, cash gave us from 2008 to 2022, on its best year, cash best return was 1.66%. A dollar that ain't moving is a dollar that's losing. On its best year, cash gave us 1.66%. A dollar that's not moving is a dollar that's losing. So the best thing for us to do is understand we just put the tools on the board. We put the tools on the board for you to see. Your best thing to do is understand, how the market maneuvering, okay? I'm going to talk about this. You're going to see this slide again on tour, but then on the tour, I'm going to show you how we understand where to go at. Oh. On the tour, you're going to see this slide again. But on the tour, we're going to give you more in-depth so you can know how to play the market year in and year out. Not your long-term portfolio, but you create your own recession or bull market portfolio. When I told you I'm going to equip you with the tools, is because not only are you going to learn how to beat, see, I'm going to show you, this is the thing, and I'm going to say this boldly. There's people that probably 100% made more money than me. I've never claimed to be the best trader in the world. That's never been my claim to fame. But I know how to get some money out the market. I know how to print some money out the market. But I guarantee you, you ain't gonna find nobody on the gram, on social media. You're gonna barely find people on Wall Street that can say during the recession, they beat the market by 17%. And here's what I can show you. If we pull up the last slide of 2022, it'll say recession portfolio, 17%. That's buy and hold. That's buy and hold. You ain't gonna find that. You know why? Because that's the dirty work. That's the dirty work. Yep, I got a long-term portfolio, but guess what? In that recession portfolio, we actively managing that, which means end of the year, I'm putting something in. Beginning of the year, we swapping out. We moving. We seeing what's going well. We seeing what the market is rewarding. We taking some things in, we putting some things out. We took some oil stocks out last year. We replaced it with NVIDIA. We replaced it with Meta. We replaced it with VTRX. We replaced it with TPL. We replaced it with CELH. You know why? Because there's a formula to understanding where the market is giving us our bread from and where we need to exit some positions and put some other ones in here. And I'm going to keep it real with you. I got the formula because once I do it back to back, we beat the market in a recession, end of the year by 17. We come back halfway through the year, we up by 20-something. We ain't playing no games. I told y'all, it's clicking for me. I'm putting out triple doubles from here on out. Because once you do it once, they're going to say it's a fluke. You do it twice, you know something. The third time, you got the formula. I just need and the reason why I ain't using the old time, because this one is documented. I'm documenting it for you. You become powerful. You unleash a different type of power when you can say, my buy and hold gonna beat the market and my options gonna beat the market. You become powerful when you say, yo, I ain't waiting on my job to retire me. I'm gonna retire me when I feel like retirement. I'm gonna put 10 years early on my retirement. I'm gonna live the life I want before retirement. I ain't gotta wait till 65 for the people who ain't there yet. For the people who over there, 65, yo, I got 2 years to kill it, to do what I want you to take life and play it on your own terms. That's what I want you to do. That's what I want you to do. Recession tour, we gonna give you the formula. We ain't putting it in a course or none of that. Come to the tour, you gonna get the formula. I promise. I'm gonna show it to you, and you gonna say, that's that sauce. That's that sauce. I'm telling you, you gonna get this formula, and you gonna say, damn, that's how Trap did it. Damn, that's how Trap did it. Okay, I got my long-term portfolio, but now year in and year out, this how we gonna beat the market. So I want to take advantage. I want you to invest long-term. I want you to do your leaps, but I also want you to take advantage of every way the market moving. If the market rotating this way, take advantage. The market rotating that way, we gonna take advantage. We on tour, we on a tour. And we ain't got no celebrity names because I don't want you to be motivated. I don't want you to be inspired. I don't want you to leave there with one of these full of billionaire, millionaire quotes. I want you to leave there with the tools. I want you to leave there with the workbook saying, yup, Trap did this, Trap did that. This is what I got to do. That's the difference between leaving empowered and equipped. That's what we leave.
What's good, fam, man? It's your boy, the Wall Street Trappin, man. Listen, we are going on tour. That's right, man. The Recession tour is gonna be crazy. Listen, I'm breaking out my personal financial breakdown so you can see exactly how my accounts are set up, how my financial strategist got me set up, and you actually get the workbook of that content once you come to the tour. If you on that VIP, man, you get to have that content for yourself, man. Listen, man, Trappin Tuesdays, the Recession tour is coming to a city near you. We coming to New Orleans, we coming to Atlanta, we coming to LA, we coming to Houston, we coming to New York, Philly, and Chi-Town. Listen, we understand so much is going on in the economy right now. So many people are getting hit, whether it's their 401ks, retirement plan, portfolio before the recession. Listen, I want to walk you through the journey and not just empower you, but I want to equip you. I want to financially stimulate you. I want you to breathe life into your last name and turn it to an asset. Now is the perfect time. We are the financial revolutionaries, man. Get your tickets, man. It's $97. Get in the room, man. For the Recession tour, we want to leave you with a notebook full of notes that you can use the next day. You got to make the small investment right now that's going to pay dividends for a lifetime, man. We're going to be the last ones to get it out the mud so everybody behind us can get it out the market.